Good morning, everyone. Welcome to the opening playbook for Monday, August 24th. I hope you're having a good morning so far. If I sound a little less enthusiastic than normal, it's just because I don't have my full voice today. Something happened this weekend. I don't know what, that I kind of lost my voice. So that is not that I'm not happy to see everybody here in opening playbook, just that I don't sound quite like my normal self. I know that we pushed this back about a half hour because Nathan was busy with Roger and Tim this morning with their 24-hour payout plan and the launch and class and everything regarding that. So if you haven't heard about that, I'm sure you'll hear about it throughout the day today. But they launched a brand new program this weekend. Uh, Basically, Roger, Tim, and Nate getting together on something. And if you don't know Tim, he's with a different company called Stocks to Trade, and we partnered with them on getting something together. But I'm sure you'll hear about that throughout the day and the week this week, since we just co-launched it with them over the weekend. But that's not really what we're here to talk about today. We have our normal opening playbook session on Monday. Is Nate doing gap opportunities, and he should be here with us in just a moment or two. So in the meantime, how's everybody doing this morning? Oh, here he is. Hi,
Oh,
Nate.
Dave, what did I sign up for this morning?
I was just telling everybody a little bit about uh, kind of Nathan, Roger, Tim, medley going on, and this program that launched tremendously successfully this weekend. Congratulations on that. And anyway, obviously, we're here to talk about gap opportunities this morning, and I know we have one or two new people in the chat today, so welcome to all the people who are here for the first time. I mean, welcome to everybody, but we always like to do a special welcome to those who are new. So.
Yeah, we are
You
we are
already
certainly happy
you
to
signed up for cat herding.
yeah, certainly happy to have our new folks here in the room, and I know there definitely was quite a few of you. So I apologize, by the way, for bouncing around. This has been a crazy morning, which it's crazy in a good way. We have so many new people. We had a ton of fun with Tim and Roger over the weekend. If you guys were there. Between the strategy itself and some of the stuff they covered there, and Tim telling Roger that he was going to get him bow hunting on a tree stand, it was a lot of fun, and we really enjoyed it. And I hope you guys did too. So we're going to shift gears now. Don't worry, we'll have tons more training on the 24-hour part of the equation because that's that's where we have all these new people. But we're going to shift gears and get into our regular opening playbook Monday session. That is, if I can find my chat here somewhere and get my bearings after bouncing around like a mad person from my 9:45 members class to the 10 a.m. 24-hour class to opening playbook. All right, folks. Well, again, let's just start by taking a quick look at where we are in the overall market here. One of the things that caught my eye today is that the MAGs and the QQQ continue to diverge. MAGs being the MAG 7 ETF, obviously what we used to think of as kind of the big tech names and driving QQQ every day, have been on a very interesting divergence now going on almost a year since the AI trade really picked up. We're seeing more of that today. Now, the good news about QQQ being down 1% is that puts us in phenomenal position for our two-way trade. I'm actually going to go ahead and close that right now from our Friday closing playbook trade. Let's see. Well, assuming I can get as much as I think I can get out of it. I think I can get about 90 cents.
Oh, that's like 50%, right?
Maybe it's actually not. Let's see. Maybe I can't get 90 cents. I'm going to put in a limit for 89 cents. Oh, well, filled instantly. The mid price was lying to me. Oh, think or swim, you little devil. Okay. Well, I got 89 cents instantly, and obviously should have gone for more. The mid price showed 81 cents.
Wow.
I went on QQQ, which is a very high volume instrument. I went 89. So, folks, if you haven't learned the lesson about start higher and crawl down yet, lesson number 3,422 in the books. Definitely start high and crawl down. Great trade for our weekend freebie there on QQQ. If we take a look at the sectors today, we are getting the same old picture. XLK, that's technology, driving us down, pushing us lower, not wanting to play ball. This has been the case now for most of the last 2 weeks as we've gotten all this selling pressure. And I'll show it to you here. If you want to look at it on the chart, pull the chart over here. So this is SPX, S&P 500. Obviously, we got this big run up. We've been breaking down through these levels. We've had a lot of selling pressure since August 11th. Where is that selling pressure coming from? Well, SMH is where most of that selling pressure is coming from. After a big rebound up, where I thought we were probably sprinting to all-time highs, little did I know, SMH is down another 10% in that leg. Okay, so that is where this selling pressure is coming from, and you can see it as soon as you zoom into the technology sector here. Everything else, neutral to healthy. Energy down just a little bit, but nothing crazy there. But technology taking the brunt of it and pushing us lower. In my opinion, folks, and I mentioned this in Telegram, I think the ball is officially in the seller's court. We had a big run down, a nice retest of 7,700, which we absolutely nailed, by the way. Nice retest of 7,700, and then we're floating down. So if selling pressure wants to continue, you can't really get a better looking structure to make a break or at least a touch on this 7620 level. If selling pressure kind of cools off, maybe we float right back up into that $7,700 range. But I think we are in the seller's court just to see how much they want to, kind of push in either direction here over this week. All right, let's take a look at some of our gaps. Actually, this is crazy, Dave. Since I started doing Monday gaps, the average weekend gap on the S&P has been like 0.2%. So we've had very, very quiet weekends since we started doing this. Interesting timing for that. So we actually haven't had a lot of big gaps. This session might be our shortest yet, but let's start with NVS. Okay. NVS. Oh, that's a nothing burger. Lame one to start there. Okay. Not interested. Pass. Oh, PDD, which burned us last week. Let's see. What do we get on that? Oh, of course, this week it's already gapped and filled the gap. After no gap fill last week, we got a gap there and a fillage of the gap immediately. Okay, let's look at Alibaba. Filled the gap. Okay. By the way, if you guys aren't sure what I'm looking at weekend gap. So from Friday's close here, what we're looking for is a gap that's at least a half an ATR wide, and see, can we trade it to fill that gap? Well, you can look, Alibaba gap down. We're late to the party here because it's already up 1.8% on the day and has filled that gap. What else do we have here? Not a lot on our list. Okay, let's look at TTE. Okay, trading view doing the delayed data thing. Let me check it on Schwab, see what it looks like. Okay, yeah, it's a gap right down into that 74 level or 88 level rather on TTE. Not a very good looking chart. Okay, we'll come back to that one too. HDB. I mean, nothing. I don't even know how that one made the list. Nothing really there. Wow, this is going to be the most boring gap session of all time. And TradingView doing the delayed data thing makes it even more annoying. Merck still has an outstanding gap. Okay, so Merck, we do have a potential trade opportunity, but it's from a gap last week on that health run sparked by Moderna. So it would be a break below 144.80 for an actual gap entry there for Merck, but nothing really to write home about on that one either. All right, well, let's check out the big dog. If you guys were listening to me after this big move, I said, I think the most likely thing is a concentration and a sideways move from here. 3 sessions in, we are right on the ball there, and the market has gone absolutely nowhere. Okay, let's see. Do we have anything else on our whole list? I mean, these gaps are Pepsi. Okay, not nothing here. Pepsi might work. Kind of have a bearish, breakoutish, uglyish structure. Not sure how to make my trend line work here because one looks like a breakout, one looks like a breakdown, depending on how you draw. This is why I don't like trend lines. Beauty is in the eye of the beholder, and breakouts are in the eye of the trend line drawer. But I do think this is a decent gap. We've seen Pepsi get rejected multiple times here. So let's see if we can get any value on PEP. See if we can get any value here on PEP. What I'm going to look for is a bearish trade on PEP that closes this gap of 143. 143.50. Not bad, actually. 145, 144 for this week pays over 100% ROI. That's not bad. Okay, I'll go ahead and put that one in. So again, if you guys are new, we're doing a bearish spread here. It's a little complicated if you're brand new, but what we're doing is we're putting a line in the sand right here at 144. And we're
What's your
saying
expiration? Sorry.
for Friday, we're saying if by the end of the week, the market can close this gap and get below this level, we'll close this trade. A fill of the gap would be a closing of the trade here. And that'll get us over 100% ROI potential, but we'll probably close it early if the gap fills versus waiting till expiration. So maybe make 40% if it closes early or 60% if it closes later, just depending on what kind of market action we get there. It's actually moving a little bit right now, and that price is going up just a bit. It was about 44 cents a minute ago. I'm going to try at 45 and see what we get here at 45.
Using puts for a debit.
Yes, sir. And again, we're just looking for a gap fill. So this is a trade that's managed on the underlying. We're not actually managing it based on the option. We're not saying, hey, the option's up 20%, so I'm going to close, or the option expires Friday, so I'm going to close. It's based on, does the underlying stock come back and hit this gap? And if so, then we will go ahead and close it and take our money. All right, let's see. Do we have anything else interesting? Well, Coke is going to be the same trade probably. Yeah, Coke's the same trade basically, and I like... Oh, did I fill? There we go, 45 cents. All right, that feels like pretty good value actually on Pepsi there. Oh, this is Micron. Let me remove my trend line here. Micron has turned into a rough looking chart with gaps all over the place. I'm not sure we want to really trade Micron. If it was fully back into an uptrend, this would be an interesting trade because there is room here. You have about 8%, 7 to 8% on the underlying stock here for this gap. Just not a very good looking chart right now that you can have a lot of confidence on Micron. So I'm going to pass on Micron. Let's check MasterCard. Gap and run on MasterCard on a great looking chart. Not going to mess around shorting that. I have no idea what this stock is, but not a big enough gap there. Sony. Yeah, Sony's kind of breaking out. I don't think there's a good enough structure to trade that one either. Let's check. I don't even see a gap there. I don't even know how that one made the list. TSM, same thing as Micron. AMAT's probably going to be the same thing. Yeah, just nothing. Just dry. We are dry here. ARM's probably going to be the same thing. Nothing. Shell already filled the gap. Nothing there. Berkshire. Small gap. Not really something I want to trade either. It looks like maybe even a continuation and a crack back above 500. Berkshire might actually be a buy if it holds a crack back above 500 bucks. Guys, that's my entire list today. Wow.
Do you want to go back to Merck for a bearish trade?
That was a short list, And yeah, well, this one would just be if it closes below 144 would be the trigger. So I'll
Yeah.
put this one on the wait list. If we get a close below this, that would be like what Graham would call confirmation gap, where the gap builds, it extends, and then you get a reverse back through the range. So the way these gaps work is not like a Monday gap like we're trading. This is where the entry is a start of the filling of the gap. But to do that, you normally need a full week of it not filling the gap, and then a breakdown, which we might have like on S, for example. S, well, there's not enough space there. You need usually a bigger gap for that kind of trade to work. Someone mentioned AMD. Yeah, nope, not really. Not really any room there. Hey, Night Owl. Usually on these sessions, I kind of just update you in my Telegram or on my follow-up sessions like tomorrow or in closing playbook. I'm live a lot. And so I pretty much rely on people to chase me down, to be honest, and say, hey, did you close this or whatever? But usually I will post it in my Telegram channel if I'm taking a trade off the books. So first thing I would do is recommend just jump in Telegram, keep an eye on that. That'll help you have an eye on what I'm doing. Oh, well, thanks for
But
jumping over. Appreciate you.
but just to
Aaron said.
sorry, just to cover that a little bit, because Dusty said, so we're holding to close for that. No, we're closing when we see Pepsi, the stock, not the option, close the gap. So if we see it close the gap, then we want to get out of the option. We're not really holding the option based on how the option does.
Yes, sir. AAOI looks kind of interesting because it had a gap that it didn't fill and then gapped on the other side. So you kind of have this double gap here from the last week that it didn't technically fill and then gap through. It's kind of a funky trade. Might be interesting to see if there's any volume on that one. Aaron gave us this one, AAOI. See what that looks like, AAOI. For something like a 120 price. I mean, this is a huge mover. ATR is insane, 6% a day. 120. Oh, wow, that pricing is terrible. Well, right now it's saying that a 13% out of the money debit spread would be 85 cents to enter. So we would not be interested in that. That is insane. Oh, wait, hold on. No, it's going crazy. Never mind. There's no volume. More like 28 cents to enter. So radically different. If you guys wanted to trade this one, it's a really great risk reward for a stock that moves a ton, obviously. It would be 119, 120 if you wanted to kind of get it to fill the top of this gap. You could probably get it for like 22 cents maybe, which would be like a 400% ROI. Not a lot of volume there. I'll throw it in for fun. I'll throw $100 at it for fun. Wow, filled for 21 cents instantly. Wow, once again, should have gone even more below what that mid price has.
That's for the week also.
Yeah, that's a crazy trade. I mean, it's a 13% move by the end of the week, but the stock does move a lot. So good one, Aaron. We'll take a what we call a lottery pick on that one and keep an eye on it.
That was the 119, 120 calls for 19. How much did you get in? 21 cents?
121. 21 cents I got in.
21 cents. Okay.
I think you probably even do better because I felt instantly going at 21 below the mid price there. So keep an eye on that. All right. Well, I guess that was a short session. Not that I mind because I have been talking for an hour and 40 minutes straight. But we will be back at it Wednesday. So if you guys are new here, Wednesday is a little bit better session, frankly, to jump into. It's more of a training session versus on Mondays we kind of rip through the gap opportunities, see if there's anything interesting going on, place a couple trades rapid fire. It moves pretty quick. But on Wednesday, it's more of a training session. Usually dive into the options. Whether it's learning about time decay or how targets work or whatever. So I'd recommend if you do have the opportunity, 10:30 a.m. on Wednesday, it's a great time to jump on the session. And I would love to have you guys back if you are new and spend a little more time with you in a little slower paced environment, which is always fun. And other than that, I guess I'll call it a day, Dave.
All right, I'm posting that trade on AAOI in a second here. Just make sure I got everything right. 119, 120 calls, debit 21. All right. Um, you did mention that you'll be back Wednesday, but I do want to make sure people know we do have a show tomorrow with Graham as well, where he does his weekly market recap or review. So we will have a show tomorrow, but it will not be with Nate. It'll be with
Yeah, I
me.
just don't recommend showing up. Is the only difference. No, I'm just kidding. Tomorrow's session is great. Actually, it's also a perfect one if you're newer too, because it's just an outlook. It's just a market framework and outlook. You don't have to know any fancy things about options or whatever to be part of the session tomorrow. So it's a great one to attend.
And we'll
All
be
right.
back in this room with Nate and Kane today at 3:30.
Indeed, we
So
will.
we'll see you then.
See you guys.
Let me get that information up on the screen for when we close out. If you guys have any other questions or anything, you can hit me up while I'm doing this, and I'll answer them before we close out. Obviously, Nathan is super busy today, so we'll let him bounce. But if you guys need anything else, let me know, or have any other questions about the schedule. I did post the schedule for this room. I did put a link just now, like maybe 2 minutes ago, with the link for this room. Um, we have basically three shows that happen throughout the week. In this room, we have opening playbook, which kind of changes topics every day. Normally at 10:30, we started a little late this morning because of that 24-hour payout class. Normally it's at 10:30 Eastern every morning, except Thursdays. We do Monday, Tuesday, Wednesday, Friday, and we have three different people that host the show: Nate, Graham, and Kane, throughout the week. So I posted that schedule a minute or two ago. And then we have twice a week on Tuesdays and Thursdays, we have a 1:30 p.m. Eastern show with Lance called Stonkomania. And then every day, Monday through Friday, we have closing playbook with Nathan and Kane both do it together every day. So it's both of them each day, at least on the days they can both make it. And that is all in this room, same link. It's not like Zoom where you need like a different link for every show. It's all in this room. So I posted that schedule there. But if you guys have any questions, I can field them now. So Steve, these are free shows. It's included for anybody. Honestly, whether you join 24-hour or not, anybody who attends any of our stuff, you get free access to these shows. So you can join any of those shows. In fact, we kind of have a whole schedule of free education. Let me post the entire schedule here. This will now, what I'm posting now is not just Nate and friends, but it's all of our different pro traders trading throughout the day. You basically can get free content from us from about 8 a.m. to about 7:30 p.m. every single day of the week. Well, weekday, Monday through Friday. Um, we have, I don't know, 10 different shows or something throughout the day. So these are all open to the public. They're all free education. We do certainly have members only classes for people who are part of our premium programs. People who pay to join our premium programs get members only classes that are specifically about that one program, like today's 24-hour payout class that many of you were in this morning. That was only for people who joined 24-hour payouts. But what we're doing here today, this gap opportunities session that we just did for the last half hour, that's open to the public. So there's the full schedule of all of our programs. And as you'll see, they're hosted by a variety of different pro traders throughout the day. There's a little bit of overlap. We can't squeeze it all in without overlapping a little bit, but we do our best to make everything available to you guys. So any other questions I can answer real quick before we go? As far as the trades go, the first one that we took on Pepsi, basically you're looking for it to close the gap. If you see it go down below 144, then you start looking at maybe closing it out. Oh, well, I shouldn't say that. That's the option. We're looking for the stock itself to close the gap. So if you see that gap get closed or start to get closed, then you can look at the option, make sure you're below 144 and close it out. So with the way that vertical spread works, that's one trade with two legs. If you're not familiar with that and you want some education on the spreads, like the trades we just took, both of them are vertical spreads, which means we're doing multiple legs, multiple pieces of the trade at the same time. In this case, we're buying one call and selling one call, or buying one put and selling one put as part of the same transaction. And then to exit the trade, we would close that trade out by doing the opposite. We'd sell the one we bought and buy the one we sold, and hopefully do that for more of a credit than we spent getting in the trade. So if we spent, for example, on the AAOI, we spent 21 cents per share to get in. Hopefully we get out for more than 21 cents per share, and that would be the difference would be our profit. If you want training on spreads, very few people do it better than Nathan. We have spread training in our opening playbook members area. So this show is free, but we do have a super expensive membership for this free program to get some extra content and training. It is an entire dollar to join one time. So if you want the best training you'll ever see for a buck, let me get you that link. You can join the opening playbook membership. It's really just a dollar. It's really just one time. So it's literally a dollar for lifetime access to the content. And there's a ton of training and other resources in there, calculators and stuff. It's really the best dollar you'll ever spend. And Nathan has debit spread training in there. And then I also do a course called the Beginner Jumpstart series for people who are newer to trading. And there's some extensive spread training in there as well. We go over vertical spreads, which is what these are. We go over butterflies and iron condors and calendar spreads, all that kind of stuff. The weekly program is there. You don't need links for the weekly program. It's literally where you are right now. It's the URL you're at right now. But if you go to that show schedule that I posted 5 minutes ago at marketspg.com/show schedule, that has the links to all the free programs. I can post it again here. Hold on a second. Do marketspg.com/show schedule. Typos. This is our full calendar of free shows with links. Deanna, no, the AAOI is not a credit spread. We did puts. So, oh, no, we did calls. So, no, I'm sorry. That one was a call. So they're both debit spreads. One was with calls, one was with puts. So the way that works, just very briefly, this is not a full education, but um, if you're using calls and you're bullish, it's going to be a debit spread. You're going in the natural direction of a call, which is that you want the stock to go up. So if you want a stock to go up and you use calls, it's going to be a debit. If you want the stock to go down and you use puts, which is the natural direction of a put, is that you want it to go down. So if you expect it to go down and you use puts, it's going to be a debit. So whenever we do a vertical spread like this, like a two-leg spread with different strikes, if you are following the natural direction of the option, so if you're bullish on calls or you're bearish on puts, they're going to be debits. If you go the opposite direction of the option, so if you do a bearish trade but use calls, or you do a bullish trade but do puts, so in both those cases you're going opposite the natural direction of the option, then it would be a credit spread. So if you're going up with puts or down with calls, then it would be a credit spread because you're going the opposite direction of the option. And so therefore you're selling it instead of buying it. So it's a credit instead of a debit. Hopefully that made sense without any on-screen demonstrations. Um, there is an informal trade tracker for the new money crew. It's not so much a trade tracker as far as like how much we made on each trade, but you can go back and see the trades we took in a session by joining the opening playbook membership. So that $1 thing that I posted a minute ago, if you join that, you get access to the opening playbook members area. I can show you what that looks like real quick. Let me do that. Do, do, do. All right, so you should see the opening playbook members area there. So that this is that $1 thing that I posted a minute ago. So if you join that for $1, you get lifetime access, and it's just a one-time payment of $1. There's no catch to this. It's really, we just had to charge something to give you access to the members area. If you do that, you will get an email with access to our members area, or if you're already a member of 24-hour payout or anything else that we do, it's the same members area. This will just, when you pay the dollar, it will just get added to your members area. So at the top, let me go back one step here. So at the top, you have these tiles of all the programs that you're a member of in our members area, and you can click on opening playbook, or you can click show all, and you can type in opening playbook. And if you go to the opening playbook members area, this is what it looks like. This is just a link to the live room. This is the document of all the trades that we take in the sessions. So here are the two that we took today. Here are the ones we took on Friday. And you can always see all the trades that we take in opening and closing playbook. We put them both in the same document. So we have that for you. We have a tracker that you can save your own copy of and use to track your own trades. We have slide decks of all the presentations that we do in opening and closing playbook. And if you're new to our members area, let me point out that we have these links on the right with each section that we have here that says see all items. So in this section called the opening playbook, the main section, looks like there are only 4 things here, but there are really 6. You need to click on this link to see the extra stuff. Here's a walkthrough of this members area and a link to Nathan's 10-minute meetup that he does every morning, except Thursdays, at 9:45. So if you pay $1, that is the cheapest way to get into these member-only meetings with Nathan at 9:45. That you have to be a member of one of his programs. The dollar opening playbook is by far the cheapest way to get in. You can become a member for $1, and not only do you get all this content, but you get invited to Nate's 9:45 a.m. meetings. Then we also have a link to replays where you can see replays of all of the opening playbook sessions. We have all kinds of code you can install on your trading platforms. We have an awesome calculator. This is really worth money into or onto itself, where you can use this to calculate your spread trades, whether they're debit or credit, whether you're using puts or calls. You can put in, let me make this a bigger window so you can see the whole thing. This really helps you figure out like if you put in what your strikes are that you're buying and selling, what you got in for, how many contracts you bought. It'll help you figure out what your maximum risk would be, what your max profit would be, what percentage of the max profit, you can get out of to get a certain amount of profit. Really a good calculator. It works for both debit and credit spreads, both puts and calls. So that's really handy also. We have this couple of other strategies. I'm not going to dig into every one of these things here, but we've got all kinds of helpful resources. Again, don't forget to look for this see all on the right, or you'll miss out on some helpful stuff. And then down here is where we have that debit spread training that I was talking about that Nate did. Here's debit spreads. Here's Graham's wrap order class, which is a very specific type of debit spread, but also a debit spread training. And again, see all. We have multiple trainings in here. And then this is that jumpstart class that I talked about. And each of them have different topics. But again, see all items. In here, we have 2 classes on, oh no, I covered it in one class in this one. Spreads, basics, vertical, calendar, and then we have all other kinds of training in here. But so lots of stuff in here for $1. Uh, by by far the best dollar you'll ever spend. Let me see what other questions we have. Looks like that's it. Okay. Any other questions or things I can help you with before we close out? Yep, I'll send the link again for $1. Just saw that. Here it is. Extreme Racer asked any specific trading platform you recommend. So, I mean, we get this question every day, and it's a little bit difficult to answer because, it's different for everybody. So, most of our traders use either Thinkorswim, which is the Charles Schwab software, or Tasty Trade, which is just a separate broker. They also some of our traders use Robinhood. Some of them use Fidelity specifically for like IRA accounts, retirement accounts. But it really doesn't matter which one you use. They're all going to be able to do pretty much everything that we do, although Robinhood has some restrictions that the other ones don't. So Robinhood's going to be probably your simplest interface and your cheapest trades, but they're going to be a little bit more limited on some of the things you can do. And they're not going to give you generally as good of fills, meaning you try to get in for a particular price or out for a particular price, and you won't get as good a pricing with Robinhood as you'll get with some of the other ones. But you won't pay as high of fees either. And it might be a simpler interface for some people to use, but there might be certain trades that it won't let you take. So Robinhood's a little bit more limited, but maybe a little bit simpler and a little bit cheaper. Beyond that, I would say most of our people are using either Charles Schwab, meaning Thinkorswim, or Tasty Trade. But we're never going to tell you like this is the one that's the right thing to do because everybody's different. There might be other types of accounts that you have with a particular company. There might be an interface that you like better. Honestly, if you're comfortable with a particular interface, that's kind of a very valuable thing because you need to be familiar with and comfortable with the interface. It needs to make sense to you so that you can work in it on a daily basis and be comfortable. In a way, that's to me, in my opinion, a little more valuable than 10 cents less, in fees from a different company that you're not comfortable with or not familiar with. Also customer service makes a difference and things like that. So it varies, but those are the kind of three top popular ones. Uh, Schwab slash Thinkorswim, Tasty Trade, and Robinhood. But again, Fidelity is somewhat popular, particularly for retirement accounts. We have people using E-Trade, Interactive Broker. I'm trying to think of what the other popular ones are. You know, Webull is one of them. There are a bunch. Let's see. Will Schwab close the 24-hour trade overnight? Let me wrap my head around the 24-hour trade real quick. Is it, I'm trying to think, is a 24-hour trade today's expiration or tomorrow's? So what happens on the day of expiration is 4 p.m. basically they close out, but you won't really see. Yeah, so tomorrow, I think 24-hour, we're basically closing out in the morning if we hit our target, but if we don't, we're holding it till the end of the day tomorrow, right? So we buy it today, it expires tomorrow. We hope to hit our target probably tomorrow morning, but if not, we'll hold it till the end of the day. And I believe it's a little better if you close it out rather than let it expire. You'll get a little bit better by closing it. Like if you haven't hit your target by 3 p.m. tomorrow, close it out. You'll have a little better performance or a little better profit potential than if you just hold it till expiration. But or you can let it expire tomorrow. They'll close at 4 o'clock, not at the end of, not like overnight. However, it could close overnight tonight before it expires, with like all of the extended hours and everything that there are now in different markets, different brokers allowing you to trade at different overnight hours and everything, it could potentially close out overnight tonight, just not overnight tomorrow. Because if it expires tomorrow, it expires at 4 p.m. tomorrow. So hopefully that. Uh, so if the target hits after hours, Schwab will execute it. If your question is basically, does Schwab execute overnight? And I don't know the answer to that. I don't want to guess. I don't know the answer to that. I believe it has extended hours, but I don't know if they did 24-hour yet or not. So I don't know the answer to that. I think some brokers will, some brokers won't. I don't know if Schwab is doing the 24-hour overnight on that or not. Yeah, I'm not sure. Yeah, I don't know with each broker because honestly, they've been all changing their hours over the last 2 months, um, all over the place. They've all been adding early sessions, late sessions, overnight sessions, and I have not kept track of every broker and what sessions they have going. And it's different for different tickers. So it's like this ticker, you could trade 24/7 with this broker, but only a little early and a little late with another broker. But then this other ticker, that same broker isn't trading early and late. So you need to call and ask your broker or look online if they have information online. But yeah, each broker is doing something different with different sets of tickers. It's really kind of a crazy time right now. It's great in a sense that they're adding all these extra trading hours because then, instead of missing out on an opportunity because you can't get it filled on something, you might be able to get filled while you're sleeping, which is great, but it's hard to keep track of, at least for us, where we have people in 5, 6 different brokers that are being used, and we can't keep track of what all of them are doing. So uh, I don't have the answer for you on that one. I'm sorry. All righty. I think I covered as much as I could, and we will call it a day here. It is very broker dependent. Yeah, Mark. Each broker is doing something different. It's really hard for us to keep track. All right. Thanks for your time and attention. I appreciate it. Hopefully, you're able to take advantage of that members area there. It's really like there's no trick. It's $1. It's the best dollar you'll ever spend. Um, and there's tons of training and tools and stuff in there for you. And you can always see the trades we took in opening playbook in there. And you can see slide decks for when they do presentations with slides. And there's some calculators and all that kind of stuff. All right, that's enough babbling from me. We will see you later today at 3:30, I hope, for closing playbook. If not, come back tomorrow morning at 10:30, not 11. We normally start at 10:30 for the next opening playbook. All right, have a great rest of your day.